Hello everyone, it's Mozart here. In this Sunday video, we'll see if the correction is over and what the chances are of moving further. From the current levels, there's still a chance to make a new low. So, this is the bottom, and only then will we go up from the current levels. So, look, this is the monthly chart for Bitcoin. I'll take the month straight away. But let's take a look at the chart. Here it is. What do we have here? Look, I'll immediately draw this global channel from the last bull run in 2021. So, I'm drawing it like this and like that. Now, take a good look. We've perfectly touched it during this correction. So, we've worked through the channel from the last bull run, the upward one. That's it. That is, in essence, technically in this context, what happens when we work out such channels in history? Either we drop down to this channel once more, but we don't close below the low of this candle, we don't settle below it, and then we bounce back up. Or this correction might be enough, we stay here, consolidate within the framework of the top, and with this kind of movement, we break out and make a new high. After that, we'll properly test this channel, from top to bottom. That's the first important point. So, the minimum target here has been met. For a while, I'm leaning towards the idea that there could be some consolidation here. Why? Because we have another channel for that. A sharper one. Like this. We've also got this kind of channel. And so we hit its peak. We've hit it. Bitcoin may stay in this pattern. Altcoins may rally. Altcoins may rise. So basically, that's what we need. I'll draw it in a different color, green. Total 3, altcoin. The market cap of altcoins without Bitcoin and without Ethereum. Let's also take a look at how this works here. So, what do we have here? We've got one channel through an unexpressed low, which is only visible on the weekly time frame, but I'm looking at the monthly one. We didn't get the lowy through the unexpressed lowy, that is, it was as if there was not enough and we could test even lower. For example, down to the mark of $830 billion, maybe even 820. With a bit of a buffer, pulling that liquidity is quite questionable. Technically, it's possible, but we also have this global past channel with an interesting reversal, which looks like this right now. It's a massive descending channel for TotalTree, for the altcoin, and we've broken through it and tested its upper boundary with a margin. We tested that upper boundary with a significant margin. So in this case, that's also enough. Moreover, we've hit that boundary here, if you look below, not just once. Here's the daily chart. I've gone from the monthly chart down to the daily. 1, 2. A double retest of that boundary. Based on this, I'll repeat what I've said in previous videos. If this week for Total3 closes, like today, at least above last week's low, which is above the $930 billion mark, that would be a good sign. This would indicate that, overall, the correction is likely finished, and that we'll start to take some profits, even if it's just within the correction. Even if we then head down again, we need to take something off the table. This would indicate that, overall, the correction is likely finished, and that we'll start taking some profits, even if it's just within the correction. Even if we then head down again, we need to take something off the table. So these marks, on the smaller time frames. So roughly at $1.07 to $1.10 trillion. And then we could globally turn bearish, for example. Let's see how today closes. Technically, this is very important. But, from the monthly perspective, what happened is enough. This correction candle is generally sufficient. That correction candle was already strong. 26 to 27%. If we take the start of an impulse, one correction candle suffices. It's happening now, like in 2021. Just like it was here, it's happening now. How it happened, for example, in 2021 with one monthly candle. 20 to 21. 1, 2. Then the trend continued. There you go. Here we had the Chinese ban. There were stronger candles here. And here we had the turn into a bear market. That's already irrelevant to the matter. Right. We've covered the technique. Now, let's move on to the most interesting part, the blockchain. Let's start with the short-term trends in blockchain, because, as a rule, in bull markets, they determine the bottom of local corrections, and even global corrections, to be honest. So, I took the interval starting from the 6th of November. So, basically, from the date of Trump's victory, because that marked the start of a new bull market, a new bullish trend, and it's a clear point from which we can track any sell-offs. So, what do we see here? All these peaks represent the percentage of all the people who specifically transferred short-term holdings to the exchange to sell at a loss. So, just look at how this worked. At the very start of this date, so, from the deepest corrections, from the toughest days for short-term traders, we can highlight this interval where there was a correction in Bitcoin at 92,000, that is, from 25th to the 27th of November. That is from the 25th to the 27th of November. And the current interval, they are, expressed, the largest ones. But on the 9th of December, it was strong too, but not as strong as in the last few days. We'll remove it. Look, every time we turned around, it was through divergence. So, the price was making a dip, after which it created one or two new dips. And the indicator was showing a new peak lower than the previous one. So, with each new dip, fewer bitcoins were transferred for sale at a loss. This is a divergent divergence. We're seeing the same thing now. How can we draw through the dips? 1, 2, 3, and there were 4 dips as well. So, the price is going down, making 4 new lows, 4 lows, to be precise. The indicator is also showing that with each new wave, the amount of losses was less than the previous one. So, there's a very clear divergence here, very much so. Meanwhile, during this small bounce that's happening right now, short-term traders are still locking in losses, just suspecting that there will be an even deeper correction. So, not a peak drop to $91,000, like we saw the day before yesterday, but at least on some sort of bounce. They waited for it and are still locking in losses. But the density of losses has been very high since the start of this entire rise. You can see this in the averaging, for example, over 12 hours. And I've got an hourly chart. I'm taking the 12 moving average, to put it simply. So, the overall density of losses. Just pay attention to how high it is, even in relation to the start of the whole bull run, from the 6th of November. Nowhere was it higher. And plus, you can also see this divergence here. 1, 2, main. 1, 2. You can also draw some conclusions from the bounce here. So basically, the losses that short-term holders have incurred here are extremely high. In principle, that might be enough, and it's often been the case that such a loss was sufficient in regular markets. Let's move on to the next indicator. That is, this is the same indicator, only not as a percentage of all transfers, but specifically in money, in dollars. How much was transferred by short-term investors in dollars? Well, the equivalent of bitcoins only in dollars on the exchange for sale at a loss. That is, here I have an average for 3 hours, and I take the chart here right from the end of 2023. Well, more than a year. And this loss density that we see here corresponds to the peaks. It basically aligns with the peaks, after which there was either a rebound within this sideways movement or a reversal in the trend. So, for example, there were similar peaks. Here, recently, it just didn't quite reach that peak. There were also many similar peaks during the sideways movement. Loads and loads and loads, after which we saw a rebound every single time. Every time there was a really good rebound. Every single time. The only exception was in January 2024, when after the first similar peak. Although it was slightly different in structure, just take note of that. Here we dropped with one stick. With one stick. And here we've drawn 5 waves of decline. These are slightly different things, but nonetheless, we won't turn a blind eye to that. And after some consolidation, this sideways movement, Bitcoin drew 2 more bottoms as a gift. Sorry, not as a bonus. There was also divergence, 1, 2, after which there was a reversal. That was the only exception. But overall, in terms of money, in terms of losses, in terms of loss density, what's happening right now is quite significant. And with a probability of over 50% in such scenarios, well, probably even more than 70%, the market has shown, at the very least, a strong rebound. The rebound that was just now was not strong enough to be strong. Therefore, the probability is now greater that we will not renew the bottom of the day before yesterday, but will go higher. It's not 100% certainty, don't get me wrong, but statistically, it's looking more likely. Next, something interesting we can specifically show regarding the short-term trends. This also means a cut in the short-term trends, but specifically their profit-to-loss ratio. And it dropped down to the mark of 1.6, 1.6. That's a very low mark, which overall indicates extreme overselling in the market. About how the short-term traders were washed out of the market. I can show you how it worked before. That is, there was also an exception, I will say right away, in January 20th, here on January 24th at the beginning of the year, 24, when we fell below 1. But if we slightly expand the chart, we'll see that this decline was preceded by quite a pronounced triple divergence based on this ratio specifically for short-term traders. Now we've got the latest stick, which is higher than all the previous ones throughout the entire cycle after Trump's victory. There's no divergence here. There was a divergence right here that we worked off with a drop of $92,000, and then a new stick, a new wave of growth followed. So, there are no divergences here anymore. If we look at this metric, let me just do it like this. Let's add the formula. I'll show you how to work a bit with the vowel house. This is our value add formula, which shows the latest value of the line. So, the line we have is M1. So, let's do it like this. Let it be in some red color. Just like that. Let's apply it. Yeah, and we'll attach it to the indicator. This is our Y1. Yes, not Y3, but Y1. There you go. And just look at how this works within bullish formations. We're getting rid of this sideways movement that went on from March to November. Right, let's switch all of this off. And we look at how this played out in bullish markets, where the price stopped before the reversal. It only went below the current value once. Only once. Next, we're expanding to the previous cycle of 2021. We're also looking at the bullish market and the current values. It was a bit lower here, but that was in 2020. That was the warm-up before the bull run, and here comes the bull run. We hardly ever dropped below that, and even during strong corrections, we hit that line exactly. Exactly. The start of 2023, the start of the whole global bull run, we hit below it once. March 2023 during the banking crisis. Next, right here. Weak liquidity. Spring-summer 2023. You can take a look at 2017, the bull run since 2017, the same thing. We're hitting the current value at this line and bouncing off. We're bouncing back sharply. We're hitting and bouncing. Bear market starts now, as soon as we drop below and hold there. So, basically, right now, considering the magnitude of the drop and the fact that we don't have any divergences, by the way, in 2021, it was also a reversal through divergences. And we don't have those now. This is a significant drop for short-term traders. Now let's take a look at the whole market. The percentage of profitable positions across the market, without separating STH and LTH, as of yesterday, the 21st of December, has dropped to 88%. We'll do the same thing. What do we have here as a metric? Y1, just like that. Let's just draw the formula for convenience. Let's make this value blue. So this is a very low profitability level for the market during a serious bull run. Even in March, it was at the bottom, such values at the start of the sideways movement in March 2024. We haven't managed to surpass the all-time high, ATH, yet, so these figures aren't indicative. We need to focus only on the zones where the price is at ATH. There you go, 2021. The same thing, the level is very strong in terms of support. 1, 2, 3, 4. We're hitting this level. We're going lower. That's it. This is a reversal. We've hit the... The year was different. It's not a benchmark. Liquidity was much less back then, with fewer holders and lower supply. When we pierced that level, we didn't linger, although we broke through lower. Compare this with 2021. With the current bull run, the level of drops is sufficient. Going lower increases bear market risks. In terms of timing, seasonality, and structure, it's too early for a bear market. Realized profit on the hourly chart, averaged over 3 hours, has gone into loss during this dump, which is rare. The current drop level is sufficient. Going lower risks a bear market. Timing, seasonality, and technical structure indicate it's too early for a bear market. I monitor realized profit and the hourly chart with a 3-hour average. It has gone into loss during this dump, which is rare across the market, without separating STH and LTH. A transition into loss often marks the drop's final point. So, as soon as we see a transition into loss, it often marks the final point of the drop. More often. It happened quite often. The same goes for the end of 2023 and the beginning of 2024. NOS, reversal, NOS reversal, NOS reversal, NOS reversal. And it's only here, in 2024, that we got a few bottoms as a gift. But here the structure was a bit different. Next, let's take a look at the short-term holders specifically. I love this indicator. 1 week, 1 month. So, we're currently trading below their realized price. So, below their purchase price. And in fact, they were washed out of the market. So, everyone who bought Bitcoin up to a month ago. And we've hit this mark. As a rule, we break through it downwards on the second impulse. On the second impulse, we're in the first one. Here comes the impulse from Trump's victory November, and this is the first time we've touched it. That's it. The same thing happened in 2023. This section here. Here comes the impulse. On the news about the approval of the Bitcoin ETF. Here we touch it. We make a higher high and only then break through. Divergence. 2021. The same thing. Impulse. We've broken through all these highs. I'll highlight these now to make it clearer. We've broken through the upper boundary of the range right here. That's it. The impulse has started. We're going, touching this line. A new impulse and we're breaking it down. It only worked like that. 2017 was a bit different. It was a bit different. But, again, despite the different liquidity, although some impulses played out the same way. So an impulse starts, we touch it, then a new impulse, and we break through. More often, it fails on the second impulse. Now we've only just started the first one. Per the statistics, we're concluding the local bottom is past. Well, the only thing that's bothering me is this. The only thing. This is the realized price of all short-term assets. So, at the top, that's +1 standard deviation, the red lines. At the bottom, the yellow lines represent -1 standard deviation, which, by the way, we reached on the 5th of August. And the middle line is their average purchase price. The blue line, all short-term assets up to 155 days, not just that. 1 week, 1 month, which I just showed you. There was only one instance recently when we touched it during a bull run. This is January, the 24th of January, when we saw a sell-off on the news of the Bitcoin ETF approval. So, we touched it just the once. But how did we touch it? How did we touch it? In terms of other indicators, we had less pronounced oversold conditions compared to those I just showed you, because right now, according to other indicators, it's much more pronounced. So, for example, the same profit-loss ratio, which has already approached some critical line of no return, here, in January 2024. We had a bit of a bounce before we fell below. Even when we fell below, we were actually right on that line, not much lower. And here, to drop and test 87,000, the profitability ratio and percentage would need to fall, I don't know, to 80%, which doesn't align with a bull market. But this risk is definitely there. Well, I suppose the only thing holding me back from going all in on the long side across the market right now is this. And one of the reasons I closed my long position on Ethereum at break-even, so I only kept my long on Bitcoin, was to reduce those risks. Because, again, looking at this indicator, going back to 2021, we very rarely, we didn't just touch the blue line, we hardly ever got close to it at all, in all the deepest corrections. It was only during the May crash when China banned Bitcoin mining. In the 17th year it was more frequent, that is, we touched on it, yes, it was, but again within the framework of a different liquidity. We touched it twice during the entire bull run. It's generally a rare occurrence in bull markets, but we can't rule it out completely. Just to keep it in mind, such a scenario could happen. If it does, then the stopping point, the best buying price to average down on Bitcoin in the event of further corrections could be around $86,000 to $87,000. That mark and that line represent the average buying points for all the short-term traders. So, based on what's just been said, we can draw a certain conclusion. The conclusion, in my opinion, is our long position on Bitcoin. Right now, it's sitting at break-even, at the average entry point. With a higher probability, over 70, even 75%, what's going to happen now? Reverse and close the gap, or make a new high and pull back. Alternatively, close part of the Friday buyback, touch the 50 moving average again, and move up. These options are likely. Then, divergence will appear. And even better, let's make a new high up there, and only then go for a deeper pullback. Either we close part of that Friday buyback, somehow cover it, quietly, touch the 50 moving average for the second time without breaking that low, meaning we don't close below it with the body. And from there we move up following the same scenario. I give these two options a high probability, over 75%. And then, after that, we'll draw a pronounced divergence with the indicators and everything. Just like that. And then we start a deep correction. Just like that. And then we start a deep correction. Percentages thereat 20, 5, 20, 25, maybe even 30. One way or another, we'll need to come here to this point. We need to take out this liquidity, to test Trump's protection zone. It hasn't been tested even once. With a lower probability, if something terrible happens, something bad, I really don't know what could happen. Well, maybe Trump will say something about having second thoughts on creating the Bitcoin reserve. Or there might be some terrible data that would make the Fed completely abandon any plans to cut rates. Or suddenly inflation starts to rise sharply, although there's still time before the next important macro indicators. We're heading over here, and I don't know. Over here. And from here, we bounce back to the 100 at least. And at that 100, we'll need to make a decision on what to do with the altcoins. We'll probably need to close them, and generally with the script. At least temporarily. This will be the perfect entry point. Here, I'd even average down, not closing at the stop, but adding to double my position, and I moved the stop under this switch. For example, that option is possible. This requires appropriate factors that do not yet exist, but they may appear. I'm giving it about 20 to 25%, no more than that, because the fact that we've already touched the 50 moving average is considered sufficient. We haven't touched it for a long time, practically since the beginning of October, and we've only just touched it now. That's enough for a correction. We don't need to go down to the 100 moving average. It's not necessary to do that, because that would threaten a global reversal. We need a very strong piece of news for Bitcoin to break through the 50 after such a rise, like the Chinese ban back in 2021. There's no need to go down to the 100 moving average. It's not necessary to do that, because that would threaten a global reversal. We need a really strong piece of news for Bitcoin to break through the 50 after such a rise, like the Chinese ban back in 2021. So, those are the conclusions. Details are in the Telegram. I hope you found this video helpful. It's lengthy, but I recommend watching it for your own broadening of horizons to see how data can be analyzed on the blockchain. Thank you all for your attention. This was Mozart on the line. Have a good day. I also hope and wish for everyone to see the Santa rally and a recovery of the struggling crypto, especially the altcoins. That's it. Have a great Sunday and goodbye everyone.